All right, so this is Carl White, and I'm speaking today with Owen Lee, CEO of Success Mortgage Partners. And Owen, you're the one that always brings us the, we'll say expert advice, but the expert analysis of the market. That's what you're much
Hmm.
too humble. You're much too humble to claim that, but
Thank you.
you bring a lot to our group about where rates are going and what should be looked at, legislation that might be up and coming. So just for a minute, let's talk a little bit about where do we see rates going here for the rest of the year, maybe into spring, and then let's
Yep.
transition into, hey, it's the end of the year. What do we need to do different or special here toward the end of the year to put us in position to excel in the first of the year? So let's start with the
Yeah,
first part first.
I would love to. So as we're recording this, we're a couple weeks after the election. And as you remember, we had that big protective trade, right, running up into the election where interest rates kind of got really good down around six in very late September and the first 10 days of October. And then we had that trade. Markets always hate uncertainty. The election was a big uncertainty, and the market dropped off. And of course, our market moves inverse. So a dropping market is an increasing rate market, which we definitely saw. And interest rates got up to high sixes, maybe people selling 6.5 with a point or seven, depending on where you are and what your pay program is and how many expenses you have. And we've kind of stabilized since then or come down a little bit. And I would expect to see more of that through the late 2024, early 2025, and for us to be stable with a bent toward a slightly improving market because we've had the big protective trade already. And the unknown, whatever was going to happen, has happened with the election. People are having time to distill it, people are having time to get ready for it. And you're seeing some calmness come back into the market. So, absent any big economic news or any big change of course from the Federal Reserve, which I don't think we're going to see, I think we're going to see mostly flat with a slight bias towards an improving market as we finish off 2024 and get into 2025.
So great news there. All right. So
Very good.
we got a little bit of a tailwind. I wouldn't call it a big tailwind, but at least it's not a headwind coming against us anymore.
That's right. That's
So so
right.
it
And what you'll see with stability is when there's a lot of talk about, the rates might go up or the rates might go down, people have a tendency to hold. When people are scared or when people are confused, they tend to do nothing. They shelter in place. And so when you get to an area of stability, people are much more likely to move and make a decision. So obviously for the northern climates and whatnot, you're getting to a point in time where the calendar kind of works against you a little bit. But I think the rate environment is going to help us stability to slightly improving.
All right, great news there. So then let's transition. So with us having a little bit of a tailwind, we have
Mm-hmm.
a optimistic view, certainly more than we've had in the last couple of years going forward. What do we do? So
Yep.
here we are, like as we're recording this today, we're like right at Thanksgiving,
Mm-hmm.
and so we're entering into the holiday season. What's your approach here during the holiday season? Do we kind of get ready for the first of the year? Is there anything you do different, like right away?
So, two things I usually like to do this time of the year. I firm up my goals for 2025 because I'm a big believer in doing your goals in advance. So, I like to have mine done by December the 1st, and then I have December to think about them, maybe make slight revisions, but I want to have them done because, you know, January 1st, I'm, sipping on a beer, eating a cheeseburger, and watching college football. January 2nd, I'm back to work. So I
Yeah.
like to have that. I like to have that done by January 2nd. So and not sit around the first 2 weeks of January and working on that. That should already be done. Also, in my career, I've always been a big prospector in December. I've always started to make those calls. Just because I get it, a lot of realtors are taking time off, but man, oh man, a lot of loan officers go to sleep too. So, you have a bit of a clear field. If you are doing your prospecting in December, you're not getting a lot of competition from your fellow loan officers. So, I always thought this was a great time to prospect. Even if the realtors are taking time off, they're going to get that voicemail, they're going to get that text, they're going to get that email, and they're going to think, oh, I need to call Carl back, or I owe Owen a phone call shortly after the first of the year here because they've been calling me. So I've always thought it was a great time to prospect.
So when you say this time of year you like working on your goals, right?
Mm-hmm.
How do I figure out what my goals are? Like I'm sitting here and I'm going, all right, I want to do better, I want to do more, and the words
Yep.
better and more is very open words. Like, how do I decide where to even set my goals? What does that look like?
Right. So I think this is a time where we really have to employ some strategic thinking. I used to have, as you know, Carl, I started in the title insurance industry before I was in the mortgage business. And we used to have this title salesperson that would walk by my office every Thanksgiving, around the time of the holiday party. And she'd come in and she'd say with a total serious face, Owen, my goal is to pay $1 million in taxes next year, which of course means you got to earn like 3 to 3.5 million. No plan whatsoever to get there, right? She had a better chance of getting struck by lightning, winning the mega millions, whatever. So that would be the approach that I wouldn't take, right? So what I would do is take an honest assessment. I think the number one thing of goal setting is you have to be honest with yourself, right? Am I going to time block? Am I going to prospect? Am I going to do my high leverage activities, the things that really return value to me? Am I going to be disciplined about those things? Or am I just going to do more of the same? Right. And what can I plan on to keep doing it? Because we don't want this to be like January at the gym, right? Where everybody goes 5 days a week, and by Valentine's Day, they don't know where their workout shoes are.
Hey there. Hey, if you're loving the tips so far, be sure to hit that subscribe button right down there and then tap the little bell so that you never miss out on more free cool tips coming your way. Also, I would love to hear from you. Drop a comment beneath there. Let me know what you think or tell me what you'd like to hear next.
So I would take a realistic assessment of where I am and what I am willing to put into it. You have, which I've seen a couple of times now, a tremendous presentation on the power of one and just having a goal to get one meeting with a realtor per day and what that mathematically does for you over the course of a period of time. And it's very, very powerful. Hundreds of thousands of dollars in your pocket, but it takes a little bit of discipline, right? You got to put in that prospecting time. Only 8 hours a week. That's all that program calls for. So I think I would start with a real honest assessment of what I'm willing to put in and then create a goal in order to do this. And, also, what is your goal? Is it to get a new car? Is it to buy a house? Is it to take your family to Hawaii? And then I know Carl, with a scientist background from the beginning, you're a big fan of reverse engineering, and I think that has a huge role also.
Yeah, that's for somebody might be new to the podcast. That's where uh, you sit down, and boy, what a great time of year to do this, by the way,
Mm-hmm.
is to sit down somewhere quiet. In my case, I did it or do it with the lovely Mrs. White, where we pick a Saturday morning and we sit down and like, all right, what do we want? Like our perfect world, what do we want? I want to be driving this car. I want to have this wedding paid for, at our
Yep.
age, or
Yep.
I want to have the student loans paid for, or the college paid for, or I want to give each one of the grandchildren, this and some sort of an endowment fund of some sort, and then figure out what all that cost. And let's say that cost, and I'm just going to grab a number, $400,000 for the year. Then I
Mm-hmm.
just simply do reverse engineering math and see if we had scheduled these podcasts, I'd have done the math ahead of time. But like if I want to do 400,000, so 400,000 divided by $3,000 per loan, hypothetically, that'd be 133 loans divided by 12 months. That's only 11 loans a month,
That's right.
right? So 11 loans a month, there's my $400,000. And so I figure out, what do I want first? I want this. Well, what do I need to do to have that? And then
Yeah. And
and then the
remember, we
question,
gotta figure out the difference between net and gross, right?
that
Because
good point there.
right,
Yeah.
are
Oh,
we
so in other
talking
words, you're
about
saying that we
tax
actually have to pay
dollars or
taxes
after
on
tax
this.
dollars? That's right.
Yeah. So we need to gross this up by 40% maybe,
Um,
so,
yeah, I think maybe a little bit less,
but even
depends
still,
on
let's,
what
let's say it's
tax
15
bracket you're
loans.
in. Don't
Yeah.
forget state taxes, right? If you're in Florida like Carl White, you pay zero state tax.
That
Or
is true.
if you're in Michigan like I am, we pay 4.25 with state tax. You can't
But
think
Owen,
about
if I
that.
figured out how much extra I pay into Disney by living next door to it, I'd probably be I'd probably be cheaper paying Michigan state taxes, to be
Carl
brutally
White
honest.
pays the Mickey Mouse
I
tax.
I do pay the Mickey Mouse tax very often, so
That's right.
so cool.
That's right.
So sit down and figure out, what do I want, and then
Mm-hmm.
the question is not how do I make $500,000. The question is, how do I get enough leads to close 15 loans a month? And for me, that would be 62 leads divided by four would be, I need 15 leads a week, or basically I need 2 leads a day.
That's
So if I
right.
get 2 leads a day, so now the question is, my goal is to get 2 leads a day. What do I need to do to make that happen? So good stuff, man.
Well, and so often, I think this is the time, for our goal setting, like for our company goal setting, we get together with our senior level management team and we really have a big meeting about figuring out where we think we can be. And then we send, and then we have like a 2 week timeout period where we really let the time distill. How are we going to get there? And is that still the correct goal? And then we meet again. So I think you have to have some time built in there. Also, be real honest with yourself about what you're willing to give. I think that's the biggest missed ingredient, I should say, is after so many years of working with loan officers, and like I said, we still have a title insurance agency, and I've been in some form of commission sales most of my professional career. Whether it's selling individual mortgages or our company or whatever, but you have to be honest about what you're willing to give. I come across so many commission salespeople that at some point in time in their life turn into people who are maintaining their business as opposed to growing their business. People say they want to grow, but they're not willing to do the actions necessary to be in growth mode on a consistent basis. And I'm telling you right now, for those that want to commit to and accomplish those actions, the reward will be there. There's not a doubt in my mind.
Good stuff, man.
Yeah.
Well, brother, I'm looking forward to working together here in the upcoming year. I really do. I think it's going to be an epic year. I think, like you pointed out at the beginning, I think the rates are in our favor. Uh,
Mm-hmm.
Frankly, and it's not something I'm happy about, but there's half as many loan officers in the industry now, like literally,
That's right.
that
That's
half are
right.
gone. And you know what? Some of them were pretty darn good, and so I'm never happy to see somebody. It's like you're paying football. You never want the other team to break a leg or anything, right? You want to
That's
win,
right.
but not, you don't want to hurt them in the process. And so, but it is what it is, and there's less competition. We saw, you showed us the charts the other day where sales are going to be up, like loan volume is going to be up.
Mm-hmm.
So loan volume up, less loan officers going at it. Good time to be ramping things up.
Well, I'll tell you, whether you choose the economist from the Mortgage Bankers Association, from Fannie Mae, from the National Association of Realtors, they're all pretty tight in their predictions. There's not an outlier. They're predicting around a 25% increase in overall dollars lent, and they are predicting the next 2 years, 2025 and 2026, to be around the fifth and sixth it's in the past 20 years. And so if someone was going to tell you you were going to be in the top quartile of active markets for a 2-decade period of time, and you were going to have rates that were relatively stable. We all know with the 24-hour business cycle, we're going to get a little bit of a herky-jerky. I think the MBA, Mortgage Bankers Association prediction is as good as any. They show us fluctuating between like 6.5 and 5.75 for most of the next 2 years. National Association of Realtors, Fannie Mae, very similar. This is a good time to be in the business, and you will get rewarded if you put in your elbow grease on your prospecting.
Good stuff. All right, man. Hey, thanks a lot. We appreciate you, Owen, and looking forward
Absolutely.
to your words of wisdom for next week.
Always love checking in. Thanks, Carl.
And for our listeners, as you're listening to this today, just think when you're ready to see how we make and help you get that extra 2 leads per day, right? Which they're doing reverse engineering math. I don't know, maybe $400,000, $500,000 a year, perhaps. We'd love to map out to you how we have shown literally thousands of loan officers across the nation to get those 2 leads each and every day. We'd love to map that out for you. So just simply go to getmoreloans.com, getmoreloans.com, and we'd love to map that out for you. So go check it out. We appreciate you guys. Thanks again, Owen. Be sure to hook up with Owen on LinkedIn. Always a lot of good stuff there. And we'll see you next week right here on Loan Officer Freedom. Thanks again, everybody. Bye-bye.